Most traders believe that working longer hours automatically leads to better results. More screen time, more charts, more trades. But in reality, trading performance is deeply tied to mental clarity, emotional control, and decision quality, not just effort. And this is where regular breaks become incredibly powerful. Trading is a cognitively demanding activity. Every decision involves uncertainty, risk evaluation, pattern recognition, and emotional pressure. When you stare at charts for hours without pause, your brain experiences fatigue even if you don't consciously feel tired. This mental exhaustion slowly degrades your ability to judge setups, manage risk, and control impulses. Think about how the brain works. Attention is a limited resource. The longer you focus on high-intensity tasks, the more your concentration declines. In trading, this can lead to overtrading, chasing poor setups, ignoring risk rules, or reacting emotionally to price movements. You may start forcing trades simply because you've been watching the market too long. Regular breaks act as mental reset buttons. Stepping away from the screen helps restore focus, reduce emotional buildup, and prevent decision fatigue. Even a short pause can dramatically improve the quality of your next trade. You return with a calmer mind, sharper perception, and better discipline. Another important factor is emotional regulation. Trading naturally triggers emotions: excitement, fear, frustration, greed. Without breaks, these emotions accumulate. A losing trade may linger in your mind, affecting your next decision, or a winning streak may create overconfidence. Continuous exposure intensifies emotional swings. Breaks interrupt this emotional momentum. When you physically step away, your emotional state stabilizes. You gain psychological distance from recent outcomes. This helps prevent revenge trading, impulsive entries, and irrational risk-taking. Essentially, breaks protect you from your own emotions. There is also the issue of overexposure. Markets move constantly, but not every movement is meaningful. Watching every tick can create the illusion that something important is always happening. This increases stress and encourages unnecessary trades. The mind begins to interpret noise as opportunity. By taking structured breaks, you avoid being trapped in market noise. You allow price action to develop naturally instead of reacting to every fluctuation. This improves patience, one of the most valuable traits in trading. Often, the best trades appear when you wait, not when you watch obsessively. Regular breaks also improve physical well-being, which directly affects mental performance. Long trading sessions often involve poor posture, eye strain, and reduced movement. Physical discomfort subtly impacts concentration and mood. Fatigue is not only mental, it is physiological. Standing up, stretching, walking, or simply resting your eyes increases blood circulation and reduces stress hormones. This boosts alertness and mental sharpness. A healthier body supports a more focused and disciplined mind. Importantly, breaks should be intentional, not random. The goal is not distraction, but recovery. Mindless scrolling or consuming stressful content may not provide true mental rest. Effective breaks involve activities that relax the mind: movement, hydration, deep breathing, or brief relaxation. Professional traders often structure their sessions around this principle. They define specific trading windows and rest periods. They understand that performance depends on sustained clarity rather than continuous effort. Quality of decisions always outweighs quantity of time spent. A common misconception is that stepping away means missing opportunities, but constantly trading a fatigued mind is far more costly than missing a few setups. Poor decisions accumulate losses much faster than missed trades reduce profits. Discipline and selectivity drive long-term success. Breaks reinforce discipline by preventing impulsive behavior. They create natural stopping points where you reassess market conditions, your mental state, and your strategy. This prevents you from drifting into emotional or irrational trading. Regular pauses also encourage reflection. Trading without reflection becomes mechanical and reactive. Short breaks provide moments to evaluate whether you are following your plan, respecting risk rules, and maintaining emotional balance. In the end, trading is a performance activity, much like sports or high-level cognitive work. Athletes do not train endlessly without rest because fatigue destroys precision and judgment. Traders face the same reality. Mental stamina requires recovery cycles. Working non-stop may feel productive, but sustainable performance comes from managing energy, not just time. Strategic breaks protect your focus, stabilize emotions, reduce fatigue, and improve decision quality, the core elements of successful trading. Sometimes, the most profitable action in trading is not entering a position, but stepping away from the screen.